Hi everyone, welcome to a new episode of Crypto Tips. My name is Heidi, and this video is the first of a few in a series that I'm going to cover on day trading strategies. This video is going to be based definitely on the beginners of day trading. This video is for you. I'm going to be telling you a lot of the warnings that I think a lot of people who are into day trading might not be wanting to tell you. A lot of people want to concentrate on the profits, but there is definitely another side to that coin as well. So if you're ready, let's get into it. First and foremost, we need to understand where day trading fits in the realm of investing strategies in general. So basically, there's the long-term holders. There's the people who, for example, buy Bitcoin and they're saving it for the next generations. Those are called the hodlers of last resort. They will never sell their Bitcoin. Toby and I are that to an extent. But there's also the next step up from that in terms of trading wise is you have people who are swing traders. They are generally accumulating coins during a bear market when the prices are low or are getting lower. And then as the market swings into the other phase, the bull market, they're, having had accumulated their positions, they're taking profits when the prices are trending upwards. It's generally what swing trading is. And then we have day traders. These are people who are looking at the prices of a coin and pretty much just scalping profits or losses depending on how good they are at a trader. They're looking at a very small time frame of doing their trades, multiple trades a day. A lot of people who are new to cryptocurrencies, and the reason why I'm doing this video is that there are a lot of people who are new to cryptocurrencies and they get sucked into this concept of day trading. A lot of people want to market, their trading techniques, their bots that they have, guaranteed profits. There's the other side of that a lot of people I don't think is being represented by those people marketing. So let's go ahead and take a look. I've got about 7 tips for you as a beginner, and then the subsequent videos in this series are going to go more in depth with more techniques and more strategies for actually being a successful day trader. It sounds kind of oxymoronic coming out of my mouth because, as you know, if you guys are familiar with this channel, Toby and I aren't exactly favorable towards day trading just because of the risks involved and the fact that the bigger picture of cryptocurrency, it's so much easier and stress-free just to do a little bit of research on a coin, invest a little bit, hold it long term, and see the profits that come. But anyway, here's the first thing you should know about day trading, and that is that you need to know how much you are willing to lose, and when you get to that point, are you willing to step away? Because what happens with day traders, especially with those who are new, who don't know any better of, when times are especially volatile, if the pair that they're trading against is bad, if they're stuck in a trade and they can't exit without taking a loss, you need to set parameters for yourself before you get into it. So this is when it's very similar, I guess, to making like an investment plan. You need to have a trading plan. You need to set parameters for yourself and stick to that plan so you're not going off the book, you're not going haywire, and greed or gambling is kicking in for you and making really bad decisions. Also, a really important thing to note about day trading, depending on your tax jurisdiction, let's say you're in the US or you are in a country that taxes crypto to crypto trades, if you're a day trader, every time you make a trade is a taxable event, especially because most traders are doing these trades using a centralized exchange, especially if you're a US citizen. Just know that depending on how much you're trading, how frequently you're trading, that exchange might be automatically sending reports of you to your tax authority. So keep that in mind and make sure you have a really good tax account or tax accounting software that you trust if you're going to be a day trader. Okay, rule number 1. This goes for any level of trading or investing in cryptocurrencies. You buy low and you sell high. You need to learn to be attracted to lower prices of a coin that you know to be valuable. Always looking at timescales and perspectives. Of course, if you're a long-term hodler and you know where this technology is going in the long term, you're going to be attracted to a low price. You're going to be attracted to a dip. You're going to want to buy it because it's on sale. It's not suddenly losing its value. It's just the price is going down. Very important difference there. In terms of day trading, obviously this is even more important because if you are selling high and buying low, you're making money. If you're doing the opposite, you're losing money. Rule number 2, especially if you're new to cryptocurrencies and trading in general, start small. Start with a very small amount of money that you have compared to your overall portfolio or the overall value that you're dealing with cryptocurrencies. Start small. Keep yourself, you're going to need to practice basically, and practice makes perfect, but before you're perfect, you're going to take on a lot of losses. So if you're trading with a small amount of coins, you're not going to be incurring as much losses, and it's going to increase your chances of making a profit at all. Rule number 3, if you're going to day trade, especially as a beginner, that's going to be the insert for all of these today. If you're a beginner, day trade, the best time to day trade is during a bull market. When everything is going up, it is far easy to find profits that way. That's a go-to. If you guys follow crypto through the bear market, when no one is talking about cryptocurrencies, and you're following people who are still day trading then and they're making money, those are the people you want to pay attention to the long term. There's a lot of noise that pops up during a bull market, and if you're in this space long enough and you see the cycles, you see the people who are consistent, who actually care about it and who are good at it, and those are the people you're going to want to pay attention to. Tip number 4, you should probably be trading against a stable coin and not another cryptocurrency. So at least you're not trying to deal with the volatility of 2 coins at the same time. You can have relative stability on one side of the trade and then enter and exit for another coin. A stable coin is a cryptocurrency that is designed to have a relative stable price. There's lots of different options here. There are some rumblings about, Tether, USDC even. These are centralized stable coins, and their stability is achieved through their physical reserves of USD or other assets that they're claiming to have backing that. So those are your options. There's also DAI is a popular one. Maybe Terra's UST is going to be a popular option. Those are still pretty new. DAI has been around and, in my opinion, has been tested and proven. So anyway, trade against a stable coin. Don't go too crazy. Rule number 5, you're going to want to trade with a coin that has high volume, high liquidity. You're going to look at the 24-hour trading volume of that coin on the particular exchange that you want to use, because high liquidity means your trades are going to go through faster, and basically maybe your trade isn't going to impact the price directly as much as it would if it was a low liquidity coin. Again, if you're a beginner, you're starting small, your trades shouldn't be that heavy for any coin out there unless it's a completely random coin and the trading volume is like $10. You should be trading with coins that have relatively high volume, also known as liquidity. If you go to coingecko.com, that's a very helpful website listing all of the statistics of a lot of different cryptocurrencies. Basically, the top 20 are pretty good, but yeah, look at the 24-hour volume for those. Also, speaking of volume, you're going to want to be trading on high volume days. That means not on the weekends. Now, this last point, number 7, is just as important as any of the other ones, and that is the potential for profit that you have with your trades can also be the potential of losses you have for your trades. You need to know that. Day trading especially, most people lose as much as they earn, especially in the beginning. You're going to be losing money. You're going to be practicing, making mistakes. Your judgment isn't going to be quite right. You're not going to be adjusted to the type of volatility with cryptocurrencies, how quickly things can change. Yeah, so anyway, that's going to wrap it up for today's video. This is for the beginners of day traders. Just some hints for you guys, and in the next video coming out in a few days, I'm going to get a little bit more specific on things to look out for, indicators for general bull signals, bearish signals if you're looking at a chart, and other just kind of more in-depth tips for those of you who are ready to move on and actually dive into this. So if you're interested, hit subscribe so you can get notified when that video comes out, and a lot others. I actually have a deep dive on radium is coming out in a few days also. So hit subscribe with a bell notification so you don't miss those, and hit the like button if you enjoyed this video, if it was helpful. I appreciate that. I'll see you again, guys, real soon. In the meantime, I hope you're staying happy and healthy. I'll see ya.